Hi, I'm Zuzana Harper, Enrolled Agent. I have been known to have a good sense of humor, but owing taxes to the IRS is no joke. When you get that bill that you cannot full pay, you start looking for alternatives. Luckily, you can ask to be set up on an installment agreement. So let's have a look at your options. If you owe less than $10,000 and you think you can full pay that within 3 years, that means 36 months, then you qualify for guaranteed payment. So it doesn't matter if the IRS worker likes you or not, they have to give you that installment agreement. If you need longer term, you can still qualify under streamlined procedures. A few years ago, the IRS started Fresh Start program. And my clients got all excited. Ooh, the IRS will wipe out our debt and let us start fresh, right? That's not what happened. The IRS introduced this program to help lessen the burden of dealing with the financial statement when calculating the monthly amount, among other things. So how does this work? If you're an individual and you owe up to $50,000, you can qualify for a payment plan of up to 72 months, that's 6 years, without having to provide financial statement. If you're a business, the amount owed shouldn't be more than $25,000 and the length of the program is 24 months. So let's look at some math. If you owe $50,000 and you divide it by 72, your minimum monthly payment would be $695. If you owe $40,000, your minimum monthly payment would be $556. If you owe $30,000 divided by 72, your minimum payment would be $417, and so on and so forth. You can do the math. You also have to agree that this payment will be set up as a direct debit from your bank account by using Form 433D. It's called Direct Debit Installment Agreement. One more stipulation of the 72-month length is that your CSED doesn't expire before the 72 months are up. The length of the payment plan can be shorter than 72 months. The 72-month period is the longest term the IRS will allow you for the streamlined procedure. I also mentioned CSED. What is that? That's a collection statute expiration date, or a 10-year statute that the IRS has to collect on the balance due. So let's have a look at some practical examples. Let's say you filed your 2014 tax return with a balance due. You filed it in 2015. The IRS has until 2025 to collect on that balance. We are in year 2016. You apply for a payment plan for 6 years. So in 2016, you start and then you end in 2022, which is sooner than the CSED of 2025 for tax return 2014. So you're okay, you'll be allowed to enter into a payment plan. Now, second example, you filed your 2010 return with a balance due. You filed it in 2011, the IRS has until 2021 to collect on the balance. If you ask for the traditional 6-year payment plan, that would be up in 2022. Ooh, that is later. That is after the CSED expires in 2021. What is the IRS gonna do? They're not gonna allow you to enter into a payment plan for 6 years. They will only allow you to enter into a payment plan for 5 years because that's when the CSED expires. They want to make sure that you full pay the balance within the shorter period of time before the statute is up. Collection statute expiration date can be affected by a lot of events. For instance, pending installment agreement, filing certain appeals, filing offer in compromise, filing bankruptcy, a taxpayer living outside the United States for longer than 6 months. All these events affect the duration of the CSEDs, and in fact, they can extend it. So it's not always exactly 10 years, just beware. Now, if the streamlined procedures don't work for you because the monthly payment is too high, you can always enter into a payment plan under non-streamlined procedures, which means it would be longer than 6 years, up to 10 years. That's allowed. Now, what is required under that is submitting a financial statement. If you're working with automated collection system, known as ACS, you have to complete Form 433F. If you're working with a revenue officer, you need to complete Form 433A, which is a longer version. As a business, you're required to complete Form 433B. All these forms can be found on my website at harpertaxsolutions.com under Useful Info. Now, with all these forms, you're usually required to submit supporting documents, such as 3 months of bank statements, 3 months of pay stubs, your most recent utility statements, most recent loan statements such as mortgage or vehicle statement, your health insurance, life insurance, retirement statement showing your current fair market value. So when you complete these forms, you will show what your income is and what your expenses are. Whatever's left over is a monthly disposable income, and the IRS will want that amount to be your monthly payment per installment agreement. Now, be careful with the expenses and follow national standards in your area to make sure that the expenses you're listing are allowable. So far, you've learned that if you owe less than $50,000 to the IRS, and you contact them asking for an installment agreement, as long as your monthly payment will full pay the balance within 6 years or within CSED, whichever comes first, you will be granted the installment agreement. If you owe more than $50,000 or you need a longer term, you have to complete a financial statement and send that to the IRS with your proposal. Now, I strongly advise that you get help from tax professional when you're completing a financial statement. That way you can avoid a dispute with the IRS. You can send them a financial statement proposing certain monthly amount. You believe that's all you can afford. That's all that your financial statement is showing. And next thing you know, the IRS comes back and say, we analyzed your financial statement and we think you can pay double. It happens more often than not. Get a help from a licensed tax professional because it will help you in the long run to achieve the result that you are looking for. We spoke about payment plans that will full pay the balance within the statute. But what if your financial statement shows that the monthly payment you can afford will never full pay the entire balance within the statute? You can still qualify for a payment plan. It's called partial pay payment plan. It's like you settle for less than what you owe. Let's have an example. You can only afford to pay $100 per month, but you owe $100,000. If you keep paying $100 per month over the course of 10 years, you would pay the IRS $12,000. So what happens to the $88,000 you still owe them? Well, they write it off. They cannot collect from you after CSED expires. So it's like offering compromise where you truly settle for less than what you owe, but it just takes longer. Now, the downside of this is that the IRS reserves the right to review your financial statement. Typically, after 2 years, they will request that you submit a financial statement with supporting documents to see how much you can pay. If it shows that you can pay more, they'll ask you to pay a higher amount. If it shows that you can pay the same amount you've been paying for a couple of years, they'll keep you in the same installment agreement. Now, if it shows that you can pay even less, then there's your chance to lower the monthly payment plan you've had with the IRS. Don't forget, if you want to ask for any type of payment plan, you can't have missing returns. At least the last 6 years of returns have to be filed. If IRS filed substitute for a return for you, it's okay, but it's better if you file your own return. Why? Because they don't give you all the credits that you deserve. Not to mention, If you are self-employed, they tax you on your gross income. They don't care what your expenses are. So you might want to replace that return with your own return to make sure that you lower the balance that you owe before you enter into a payment plan. Last but not least, and I cannot stress this enough, do not accrue additional tax liability. If you continue to owe tax every year, that means something's wrong with your withholding. If you're a W-2 wage earner, go to your employer, submit a new W-4 form, and increase your withholding so you don't owe tax at the end of the year. If you're self-employed, make sure you make estimated tax payments throughout the year. They're required quarterly, but you can make them monthly to make it easier on yourself. If you owe tax at the end of the year, guess what happens to your installment agreement? It defaults. You're sent back to collection and you have to start the whole process all over again. So that's not the way to go. If there is a decision between paying current taxes and back taxes, remember, it's always more important to pay current taxes. If it means there's nothing left over to pay towards back taxes, there might be different resolutions that you can get in order to get out of collections. If you need more information on how to do that, feel free to contact me at info@harpertaxsolutions.com. Go to my website at harpertaxsolutions.com for useful information about everything I talked about today. I'm Zuzana Harper, enrolled agent, and I'm looking forward to your questions.